Welcome to Crypto Minutes, your daily cryptocurrency news for March 10, 2019. We source a minimum of 5 of the best trending articles of the day, from popular news aggregator CryptoPanic.com. Timestamps and the original articles can be found in the description links below.
Confirmed, 19 companies using XRP to power cross-border payments, the ripple effect. A total of 19 companies now say they're either using or plan to implement XRP to power cross-border payments. Ripple has confirmed that 4 crypto exchanges are on board with the company's XRP-based payment solution XRapid, Bittrex, Coins.ph, Bitso and Bitstamp. The exchanges will help banks and financial institutions move fiat across borders, using XRP as a bridge currency. The latest company to announce XRP integration for payments is enterprise blockchain software firm R3, which will utilize XRP as the first crypto payment rail on its new international settlement platform. 1. Euro Exim Bank. 2. Bittrex. 3. Bitso. 4. Coins.ph. 5. Bitstamp. 6. Qualix. 7. Mercury FX. 8. Catalyst. 9. SBI Virtual Currencies. 10. IDT. 11. Vi Americas. 12. SendFriend. 13. Flash FX. 14. Arrington Capital. 15. Bitrue. 16. JNFX. 17. FTCS. 18. Transpago. 19. Monero Upgrade successful, improved ASIC resistance, security, and privacy. Monero successfully completed a scheduled protocol upgrade hard fork on Mar. 9th. The upgrade includes tweaks to the POW algorithm for better ASIC resistance, changes to mitigate Big Bang attacks, and increased transaction homogeneity to further improve privacy. Monero, one of the leading privacy coins, has successfully completed a scheduled protocol upgrade today. Although the update contains nearly 1 million updates, 3 stand out. First, the upgrade tweaks Monero's proof-of-work algorithm, Kryptonite R, to curb ASICs currently on the network and to further preserve ASIC resistance. As a result, miners will need to update their software. Second, the upgrade addresses an edge case attack termed a Big Bang attack, where an attacker spamming transactions or rapid adoption could cause an exponential increase in the computer resource requirements that would exceed the capacities of the extant Monero infrastructure on the scale of hours, according to a Dr. Mitchell Krawiecki-Thayer, founder of Nonsense Research Lab, in a write-up on the Monero GitHub. The issue arises from how Monero structures its block size limit. The block size limit for Monero is set to an average median of the last 100 blocks. With a 2-minute block time, that means that the block size can increase exponentially when the network is under stress. In less than 2 days, the block size could grow to 10 terabytes and knock off almost all full nodes from the network, according to Thayer. The update today addresses these issues with some changes to the block size algorithm that mitigate these issues. The third changes are improvements in transaction homogeneity or sameness. The update introduces dummy encrypted data to each transaction, making it even harder for blockchain analytics to determine the source of a payment, further increasing privacy. All of the changes discussed above, according to the Monero GitHub, were deemed safe to apply by the Monero Research Lab. Note, the changes constitute a hard fork, meaning clients running old versions of the software will need to upgrade to remain functional. Users must upgrade their wallets and miners to the newest version. Once again, the Monero community continues to build and improve its software to create a fast, private, and secure digital cash. Fidelity Digital Assets is now live, offering the trading and securing of digital assets for a select group of eligible institutional investors. The firm is starting out with a Bitcoin custody service focused on the needs of hedge funds, family offices, pensions, and endowments. Although the solution is a result of several months of work, the firm made an official announcement on Twitter on March 7. Fidelity Digital Assets is a branch of the renowned asset management company, Fidelity Investments. Fidelity has been in the crypto spotlight recently, after announcing the development of their custody service and even participating in the Lightning Torch event. The first announcement of a custody service from Fidelity came in October 2018. Since then, the institution has worked with auditors refining operations, risk and compliance policies, and procedures to be able to bring institutional investors into the crypto space. Although starting with select clients, the firm hopes to bring their service to a broader set of institutional investors with time. This information was warmly received by the crypto community. For many in the community, it is considered a bullish sign for the crypto market, as explained in the video below. The year 2019 is gradually becoming what many thought 2018 was going to be. Institutional investors have been moving more slowly than most analysts predicted, but earlier in the year, Morgan Creek Digital onboarded 2 institutional investors. More institutions are expected to come in with their digital asset solution as 2019 progresses. Fidelity Digital Assets currently offers custody and trading to their select clients. This solves a problem of trust for institutional investors who want to get involved with digital assets in a meaningful, transparent, and legal way. Institutions cannot trade digital assets the way individuals can, and hence need solutions like this one created by Fidelity Digital. Fidelity's solution only applies to Bitcoin for now, although other cryptocurrencies may be considered for the platform in the future. The firm, however, would not like to touch cryptocurrencies that may be deemed to be securities or have hard forks in the near future. Crypto-powered Brave browser starts paying users BAT to see ads. The cryptocurrency-powered Brave browser has recently entered Phase 2 of its Brave Ads Developer Channel Preview, which means users who opt in to see ads on the platform are now going to be rewarded for it in its basic attention token BAT currency. According to Brave, only users who opt in its developer channel, an experimental version of the browser with less stability, are going to be rewarded for seeing ads. In the first phase of its ads preview, it found users were engaging with the ads they were shown. This new phase is going to reward them for their attention. Phase 2 provides token rewards to users for their attention, and introduces Brave's anonymous but accountable campaign reporting for brands. The Brave browser was notably funded through an initial coin offering (ICO) in which it sold BAT tokens to investors. It was launched by former Mozilla chief executive Brendan Eich, and has a built-in ad blocker. It's also privacy-focused, as it blocks trackers by default. Earlier this year, it started testing ads that appear as notification pop-ups for users who opt in. Now, seeing or clicking the ads rewards users, and although Brave is set to give them 70% of the revenue from these ad units, Eich expects users to earn at least $5 a month in BAT. By default, the tokens users earn are then sent to websites they visit according to the time spent on these, although these parameters can be changed so the user allocates a specific amount to a specific publisher, or so he keeps the tokens for himself. In the future, these are set to be withdrawable from the browser's wallet. Brave also has a built-in tipping feature, allowing users to tip BAT tokens. These features are currently only available in the browser's desktop version, although Brave plans on expanding them to Android and iOS. The companies that have so far advertised with Brave are mostly cryptocurrency related. In the future, Brave is reportedly also going to let publishers show ads on their websites, in a system that will give them 70% of the revenue from those ads, while rewarding users with 15%, and keeping the last 15% to itself. The ad feature is notably going to be rolled out beyond its own browser in the future. Brave itself, thanks to its privacy-focused features, has been growing at a rapid pace, so much so it recently surpassed 20 million downloads. Brazil, court orders bank to return over $330,000 to cryptocurrency exchange. A court in Brazil's state of São Paulo has recently ordered Banco Santander to return over $335,000 to a local cryptocurrency exchange, after it froze its account claiming its activities were incompatible with the bank's policies. According to local news outlet Criptomoedas Fácil, adjudicator Daniela Menegatti Milano dismissed an appeal made by Banco Santander on a case brought forth by local cryptocurrency exchange Mercado Bitcoin, which saw the bank freeze its account with 1.3 million reals in it. Per the news outlet, Santander froze Mercado Bitcoin's account without giving the crypto firm a proper explanation, and when asked claimed its activities didn't align with the bank's policies. Mercado Bitcoin pursued legal action. The crypto exchange claimed the funds were improperly frozen and should either be returned or deposited on another account until the process was concluded. The court ruled in favor of Mercado Bitcoin. In light of what's exposed, I find justifiable the formulated requests, condemning the defendant to refund Rs $1.350.733, fixed by the practical table of the court, plus interest of 1% per month. The defendant will support legal expenses set at 10% of the condemned value. The bank questioned the decision, and in a second hearing it was ruled Santander's actions saw it abuse its power insofar as it is not liable to seize resources deposited in the accounts of its clients, due to fraudulent transactions carried out by third parties. According to the report, Mercado Bitcoin revealed allegedly fraudulent transactions were carried out by third parties through the bank to its platform, which saw Santander launch an internal investigation into the issue. The bank's investigation reportedly even included using Google Street View to gauge the financial conditions of those involved. Despite knowing who was behind the fraudulent transactions, Santander decided to block Mercado Bitcoin's account, instead of going after the individuals themselves. The court noted that a lack of regulations doesn't mean cryptocurrency exchanges' activities are illegal. It noted, however, crypto exchanges aren't currently able to properly monitor their platforms to ensure their users don't break the law. Brazil is notably a country in which the cryptocurrency scene has been growing. Last year it launched a national blockchain association, and this year its Ministry of Justice revealed it's studying Bitcoin over its potential use in crime. Brazil's President, Jair Bolsonaro, has back in January shut down a project that was looking to launch a cryptocurrency for its indigenous population.
Thank you for listening to Crypto Minutes. This is not financial advice. If you enjoyed the articles, please click like, share and subscribe or donate. See you tomorrow, for more breaking news.